Good afternoon and welcome to our Lunch and Learn. Today, we are going to be talking about beyond the basics of loans and grants. I have with me Sophia. I'm not going to attempt to butcher your last name. You can say it in just a moment. And Miss Desha Elliott, that one I can say. They are from Accion Fund, Accion Community Fund.
Accion Opportunity Fund.
Almost. It was a itty, not a full community. It's not that. It's Accion Opportunity Fund. And they're going to talk to us today about just some of their products, about loans, about grants, when to get loans, when to get grants, what they do, the differences between the two. So I'm going to go ahead and let Sophia open us up because I don't know her last. I don't want to mess it up. But Sophia.
Good. Thank you so much, Selena. Sophia Zizuk. I'm the Senior Director of Partnerships at AOF. AOF is also an easier way to say that as well. It's an acronym we all love. And I'll pass it to Desha to introduce herself too.
Yes, I'm Desha Elliott. I'm one of the local market managers based out of Atlanta, Georgia. And yes, AOF is an easy and fun way to remember us. So thanks for having us.
Thank you so much. So tell me a little bit about AOF.
Sure, I can take a stab at it. And Desha, if I miss anything, feel free to add on. AOF is a nonprofit lender, also known as a CDFI. A lot of people don't know what CDFIs are. That stands for Community Development Financial Institution, which is a designation that we get that makes us a lender that is mission driven. So what that means is that we are required by law to make sure that more than 80% of our lending portfolio be to women, people of color, and low to moderate income folks. Now, some CDFIs do lending in areas like housing or even personal lending. Our CDFI is obviously focused on small business. So we have a lending product, we have a loan for small business owners that I'm sure we'll talk more about. We also have amazing free educational resources that is accessible to any small business owner who wants to make use of them. We have a business resource library on our website. You don't even have to give us information to access thousands of articles and resources, past webinar recordings on a variety of different topics, from, getting set up as a legal entity to marketing to staffing and everything in between for small business owners in both Spanish and English. We have an incredible coaching program. Desha over here is one of our amazing, talented coaches that provides one-on-one coaching to entrepreneurs as well on a lot of those topics I just listed. Again, that's completely free. You can sign up on our website. And then we also have other programs right now. We're even running a grant program that we'll talk about called Fast Break for Small Business, and a lot of other resources, sometimes even in-person events. So the two main things that we do are that lending piece and then all of our free resources and support programs. Did I miss anything, Desha?
No, just if there's a third add-on that I think is also very important as well, is just the policy piece. And so oftentimes you'll see where these CDFIs, they'll go in and they'll advocate for small businesses to have a lot of the transparency in lending or fair credit. And that's also equally important. Sophia did an amazing job to talk about kind of what we experience as we're working with clients on a day-to-day basis, but a lot of things that kind of hold us as small business owners back is systemic and also have to do with the policy. So just wanted to mention that as well.
I love it. I love it. So let me ask this. What makes Accion different from other CDFIs?
I think a couple different things. First, we are a digital first CDFI, which means that all of our programs and services are available, online. You can access it from anywhere in the United States. From our lending, we lend in all across the United States except for 5 states, which are Montana, North Dakota, South Dakota, Tennessee, Vermont, and the District of Columbia. And so most CDFIs are regional or local, which means they're really focused on a particular community, whereas our CDFI is national. And then we do have a very digital first emphasis where while we plan and always try to be very accessible to small business owners who want to speak to us, ask questions, right, meet with coaches, at the end of the day, you can open your computer and make use of a lot of the offerings we have. And that's very unique to us. I would also say something else that makes us unique is just our true wraparound support. A lot of CDFIs have some sort of signature, technical assistance program or class, or maybe one lending program, but we tend to sort of do it all. So we try to add a lot of resources, a lot of grant programs, lending, right, all together so that anyone who finds value in any of those things can make use of them, as opposed to, a one size fits all approach.
Awesome. Desha, did you want to add anything?
Sophia covered it.
Because she is over here killing it right now. So let's talk about grants versus loans. A lot of what we hear here is, I don't want a loan. Where's the free money at? Where's the free money? And I find myself having to have conversations like, free money, like that was during the pandemic. We're past that. Tell me, how do you advise your clients when they come to you and ask about that?
With clients, I let them know, first and foremost, this is your business, right? You're at the control of what it is that you do as far as creating this service or executing this service or this product. And so one of the best positions that you can be in as a small business is to have as many capital options as possible. What that means is, for one, you have a business that's in demand. It has the ability to generate revenue and it understands who their customers are. When that happens for your business, money attracts money. And so you're not just limited to the money that is seemingly free, right? You're not just limited to maybe financing options that come with very high risk or that have the ability to maybe take things more often than not, and have you in a position to where you're not able to see enough revenue and growth because you're addressing this expense or this high interest loan. So I usually tell clients, one, make sure you're working to have the business in demand. And two, anytime that you're going to grow, there's going to have to be some type of capital that goes with that. And then three, when you are looking for capital from any institution, any organization, any individual outside of yourself, everybody comes with their own rules and regulations, right? And there's pros and cons that come with each of that. And if you name your biggest or most favorite company or corporation, they all have debt, but they're using it responsibly. And so, the name of the game is to be able to understand what it is that you would essentially use that capital for. What is the company doing with it to where they can multiply it once they receive it? And if it is something that they have to pay back, how do you pay that back responsibly and maintain that good relationship so you can keep going back again and again?
I think that's amazing. Plus one to everything Desha said. And I would just add on, I think, grants are an amazing resource, but they're much more of an unknown quantity, right? So, unfortunately, we know as an organization at AOF that runs grant programs, for every one grant we give out, we might get 100 or even 1,000 applications that are qualified, amazing businesses for that grant. And it's a finite amount of money that we have to give out for that grant. And so I never discourage small business owners from applying for grants. They're amazing resources. They're fantastic programs. But one, it's very hard to predict, even if you're really well qualified, you meet the criteria that are stated for the grant program, whether or not you'll get it, because they're just very competitive. And two, the grant amounts may not fit the business total needs for capital, right? Usually these grants are $5,000, $10,000, maybe $25,000. And so that's usually not enough for, growing businesses who, want, to Desha's earlier point, right, really need to use that capital to scale. Maybe it's purchasing equipment that's going to increase your efficiency. Maybe it's buying inventory at a discounted price because you can buy more of it. Whatever that scalable sort of purchase or program is, usually the grant is not enough anyway. So rather than thinking about them as two mutually exclusive things, I always encourage small business owners to think through, them as different opportunities. Apply for the grants you think you're a fit for and you're excited about, but know that once you press send on that application, put it out of your mind. You're not planning on that money, right? A loan like the one that we offer at Accion Opportunity Fund, you're going to know right away whether or not you qualify for the loan, how much of that, you qualify for, right? How much capital are we offering you, what that interest rate is, and think through what that monthly payment is. So you're going to have a lot more visibility and control into what does this capital mean for my small business tomorrow, as opposed to grants, which are just a lot more unpredictable.
I love that. I guess I have to stop telling people ain't no grants, because there are
grants.
There are grants. It's just
they're less present than at the height of the pandemic, but there's still plenty of awesome organizations that are doing grant making.
Awesome. Let's talk about Accion's products, because I noticed they're right off the bat. So when I'm talking to businesses and they're like, "Well, I want to get a loan," and I'm like, the first thing I want to know is like, what's your credit score? Because that's going to determine where I'm going to direct you to. And so let's talk about Accion's program and their products.
Yeah, I can jump in on that, and Desha, feel free to add on if I miss anything. Our main product in terms of a lending product is, our working capital loan. If you go to our website, which I know is being shared on this stream, you'll be able to find the application very easily. But in terms of our minimum criteria, it's a couple different things. You have to be in business for more than 1 year. You have to have an annual revenue of $50,000 or more. And our minimum credit score is 570 and up. So we try to remove as many barriers as possible, whereas some other traditional financial institutions have different criteria than that. Obviously, as mentioned before, we lend in across the United States, except for those 5 states I listed. So as long as you're not in one of those 5 states, you're eligible. And then we want to make sure that anyone who's applying owns 20% or more of the business, and they can really speak as a business owner. In terms of the product itself, a couple different details to know. The loan ranges between $5,000 and $250,000. And then the terms range between 12 and 60 months. And one of the really cool things about our application process is we want to put small business owners in the driver's seat. So there's a small pre-qualification form. We don't want you to waste your time and give us all these documents and all these details about your business before we even know if you're a fit and if you like what we have to offer you. So the pre-qualification form takes just 15 minutes, maybe even less. We're asking you some questions about your business, your credit, all of that. And then based on that, if you qualify, we're going to tell you the loan amount we think you qualify for. And then we're going to give you 3 different options for different terms and interest rates that you could choose from. And that puts you in the driver's seat to sort of compare the different monthly payment amounts and decide for yourself, does this make sense for my business? And if so, which of the terms offered to me are the ones I want to take? And our interest rates range from 8.49% to 24.99%, just recognizing that the shorter the term, the higher the interest rate there, but we try to keep it as low as possible for small business owners. So that's a little bit about the loan. And again, we try to make sure that the business owners are in the driver's seat and communicating with us about their needs and try to meet those needs as much as possible. Desha, anything I missed?
Well, we also understand too that there can be some hesitation or, maybe some myth busting that we have to do with the business owner so that we can help them prepare for that capital. And so we have something on the education side of the house called credit advising. And so what that allows for the business owner to do is to have that pre conversation so that they can be clearly aware of where they stand in regards to the requirements. And even with your first initial question about what's their credit score is a great thing because you not only know the number, but we're also looking at the activity behind it as well. And so I think just one of the things that I would add on top of that is that there needs to be positive behavior within that credit score. We have to make sure that you've been making on-time payments, that you're not in an active bankruptcy. And so with all of those things considered, how does your personal credit align along with the other different requirements as well? And with us being a CDFI, we have the ability to be a little bit more flexible than, say, your traditional, regional, or even online lenders with what it is that we offer and require. So it's great that we have, whether it's on the education side, whether it's through our customer support, but we have the ability to really help business owners feel comfort and ease and be able to get that rapid response.
I love that. So I've talked to a couple of other. I had a couple of clients last week who were working with different types of banks, and if I'm misunderstanding this, please correct me. But is there not a process where you have to speak to somebody, like the approval comes on the computer and that's it?
That's a great question, Selena. So in our case, the short answer is if you never wanted to talk to another human soul and you wanted to do it all online, you could do that. You could be living your best introvert life with AOF. We do obviously reach out. We want to make sure that clients, especially if we see, for example, maybe someone starts an application, they don't finish it, or they finish it and they accept the offer, but then, at that point, then we're asking for more information, uploading certain documents and information about your business to complete the process of underwriting. Maybe someone stalls out there. So we often reach out by phone and email to make sure that if that business owner has questions for us, they can ask it, whether that's through email or over the phone, and Spanish and in English. But if they feel good, they feel confident, they know what they're reading, they understand what they need to do, you can proceed in the entire application underwriting process. You can sign your loan docs all online without talking to another human.
Wow.
We're very introvert friendly at AOF, apparently.
That's what it looks like. I just wanted to make sure that I understood that, because sometimes it's like, oh, I did hear you say pre-qualification, but, I just want people to know that there may be more steps to it than just that. But it sounded good. It made me go, oh my gosh, yes, yes, yes.
And on that note of additional steps, I do want to let folks know what to expect in terms of what type of additional information we would be asking them if they do, proceed after that pre-qualification form. So the types of things we'd be asking for are personal and business tax returns, a valid government issued ID, bank statements, or they can integrate with their bank using Plaid if that's easier for folks. And then if they are approved for a loan over $50,000, we require a UCC filing. So these are the types of things that we ask for when we're going to kind of complete that underwriting process. We try to do that quickly, which is also something that makes us unique. We're pretty darn fast for a CDFI. A lot of folks are still old school, doing that underwriting with the individual by hand, but we have an amazing team of underwriters that are efficient and quick. And we also have some algorithmic stuff built into our process so that we can be speedy with that pre-qualification and also with that approval, so that folks can, if you guys have those documents ready to go, you have the information about your business ready, you can really get through the full application process and get funded within a week or two, which is very fast.
That is very fast. I get questions about, I know people want to establish business credit, and there's a disconnect with why your personal credit matters. Can you speak to that?
Yeah, so there's something called character. It's one of the many 5 C's: character, collateral, condition, cash flow, capacity, right? It's one of those 5 C's that most underwriters look at. And what we're considering is, okay, based on the previous behavior, remember we used that term positive behavior before, based on that, is there a track record showing that there's going to be an on-time payment made? And, is there anything that would be hindering this entrepreneur or this business from being able to pay the loan back? One of the things I help business owners understand is that the bank has to be, and especially for a nonprofit bank, they have to be able to continue to lend again and again. And that's contingent. That's reliant upon you as the business owner being able to make your payments on time for the bank. And so those are some of the things that we're considering now. We have banks that we may partner with, or banks that kind of refer as clients as well. And so I've seen sometimes where regional banks, they'll look at the business credit and kind of find another way to factor that in, because they're, again, making some considerations for maybe businesses that they have to take a higher risk on. But for the most part, as I speak to, other nonprofit lenders, and especially other traditional lenders, that personal credit is of very high value. And Sophia, of course, let me know if I'm missing anything on that front.
No, I think I agree with you, Desha, and I would just say we don't want to set false expectations, but I think one of the things I love and appreciate about AOF's process is that we're clear about that minimum credit, right, of 570, and there are, to Desha's point, things that even if you're above that minimum might disqualify you in the underwriting process, that maybe you didn't self-report, and then we get in there and we say, oh, we didn't know about this history. But for the most part, AOF, compared to a traditional, bank or financial institution, places a lot more emphasis on your business's cash flow and revenue more than credit, because we know that credit is one insight into the business, not the entire thing. And at the end of the day, the most important thing for us is, to Desha's point, can you repay the loan? Can your business bear this debt? If so, then we want to make that capital available to you. We don't want to hinder your progress based on, credit, which can sometimes be impacted by other things like medical debt or other, life circumstances that we know may not have anything to do with your business. So there's definitely an importance in improving your credit, understanding your credit, but that's also not the only factor that we're looking at when we try to, underwrite a loan.
That was really good. You guys are like the perfect tag team. I love this. So let's talk about access to capital. And Desha's probably gonna want to take this one, but why is it so difficult for people in, I'm going to say, disadvantaged or marginalized communities to access capital, even when they seem to meet all the criteria? I just had a client, she had a 756 credit score. She was, no late payments, no bankruptcies. On paper, she looked like the perfect candidate. And she was not able to secure a credit card. She qualified for 8 or 9 different loans, but wasn't able to secure a credit card. So it might be a different question. It might be, I know loans and credit cards are very different, but it just seems like there's this access issue. Why is that, and how do we fix it?
Thank you for the question, Selena. And that one's a bit of a loaded question, but and of course, if we can be of any help for that client, she's a great fit for us based on what it is that you're saying. But one of the things that I think becomes a barrier is certain relationships. Sometimes it's not just only, does this applicant look good on paper, but it's who's in your community that you're connected with. And one of the main reasons why CDFIs were created was because there was that access to capital gap, and there has been. And CDFIs have technically been around since the 60s, and they became more formalized after the 90s and 2000s. And so you have those relationship barriers. You do have some systemic institutional barriers. I'm not quite sure where your entrepreneur is, but I could imagine that.
He's right there with you.
Oh my goodness. Well, my goodness. Yeah. Yes. Well, so, it's interesting because it's, again, still a thing of relationships. As much as, technology and artificial intelligence, still sometimes you have to pick up the phone. But then also too, it's managing the expectation of the entrepreneur about what part of the capital stack this is going to affect. And maybe it is multiple types of capital that have to be achieved. So for instance, if a business owner, I'll just throw this number out there, if they make $2 million and they're thinking that the bank is going to give them a $2 million loan, that's not what's going to happen. For us, we're looking at maybe 20% at most. And so now you're looking at 200,000, maybe 250, right? And so with that, you're understanding like, okay, if it is $2 million that you need, well, that bank is going to do what they're going to do as a bank. And there's going to have to be other ways that this whole amount is going to have to be had. And so, again, just to reiterate, it's the relationships, it's managing the expectations, but then it's also making sure that the business owner kind of clearly knows what comes on the other end of asking for certain capital.
Awesome. Thank you for that. Okay, you mentioned Fast Break earlier. I want to know. Tell me everything. Tell me everything.
Ooh. So Fast Break is one of those amazing partnerships that we have with LegalZoom and the NBA. We're in our third year of that relationship. And so this year, we are giving away $10,000, I say every month, along with LegalZoom credits. And, as long as you've been in business for 3 months and make under $1 million, I believe that you have the ability to apply. And so I believe on the website, and then also we could send something in addition to follow up with, but you all have the ability to apply for that. And it is something that we're going to be pulling a winner every month for. We've been doing it since March, and we'll do it all the way up to September.
One winner, $10,000.
Multiple winners. We're going to more than 150, exactly 150 small businesses will receive $10,000 grants. So there's definitely more opportunity than some of these programs that are, one winner or 5 winners, which we're very proud of.
That is awesome. And so how do people, the website is how you find out about that, and you can apply on the website and use that wonderful system where you don't have to talk to anybody. You just fill out the application. You have to upload.
That's exactly right.
You need
there are some documentation required depending on how long you've been in business, and that's just our way to verify. It's not the same documentation or the same level as our loan application. It's just for us to verify that you are in fact a business. So depending on how long you've been in business, things that we might ask for are articles of incorporation. If you're a sole proprietorship, the formation of that. Any EIN registration, and then any relevant professional license if that's relevant to your business. So not too much stuff, and we try to make it easy. You don't have to do all of those things. You can do one of the things that I listed. So we try to keep it simple. But yes, if you go to our website or even you just Google search Fast Break for small business, you'll find the grant application. And like Desha said, that's going to be open until September 13th. And we definitely encourage folks to apply.
So I have a dumb question. Well, it's not dumb. I'm going to ask it anyway. Do you have to have a business bank account in order to apply for this grant?
Yes. Mm-hmm. The reason that you need to have a business bank account is because that adds to your legitimacy as a business. And for to protect folks legally, we want to make sure that there is a legitimate business, and legitimate businesses have business bank accounts.
Thank you for that. Are nonprofits eligible?
I believe they are. Yeah. So, and just to be clear, I think that the full eligibility, and you'll see this on the website if you go to, is be based in the US, be in business for more than 3 months, have an annual revenue of less than 1 million. So I believe nonprofits would fall within that as long as they fall within that budget criteria. Have a business bank account, to your point, Selena, and not be in an industry that we deem ineligible. This is not going to be any surprises. These are industries that we also do not lend to currently, right? So tobacco stores, firearm sellers, adult entertainment, that type of thing. And we give a full list of that as well. And then if you have been in business for more than a year, we're going to ask for your recent business year's tax return as the form of documentation.
Awesome. How competitive is this grant?
Well, I believe we have close to 12,000 or so plus that have applied. And probably many more that are waiting to fulfill their, you can save and kind of return back to it. So there's, a lot of promotion that is going to continue to be had. But listen, they say you can't make a shot that you never take. So we encourage many businesses to apply.
That is awesome.
Definitely.
And I'm going to leave that right there as the wrap up. You cannot make a shot that you're not willing to take. That's really good, Desha. Thank you for that. I want to thank you guys for joining us today. We are at 30 minutes and 30 seconds. But I hope that we can have you back sometime in the near future just to talk about any of the programs that you may have going on, or if you just want to do a webinar and talk about, some of the things that you're seeing or some of the programs that are available where people are getting locked out of and how to stop that from happening. I would love to have you back. With that, you guys, thank you for joining us today, and we will see you next Wednesday for our Lunch and Learn. Have a good one.
Thanks so much.